Hi guys, and welcome to this week's edition of our market outlook. And it's not going to be a long one, but it's definitely going to be one which you really need to listen closely, right? So we are going to talk about dollar index, and we'll also look at Euro USD or maybe Pound USD, one of those two pairs. But our main focus is going to be on dollar index. As you've already seen on the chart that I have shared on the group, on the mentorship group, you can see that we've got telltale signs of what we refer to as an institutional market structure, right? So just to go back a bit in regards to institutional market structure. So if you remember correctly, right, what is institutional market structure and how can you use that in your day-to-day trading or in your short-term trading, or be it swing trading? So this is the analysis of correlated assets, or the relationship to inversely correlated assets. So the purpose is to determine what the smart money is accumulating or distributing. That's the purpose of understanding institutional market structure. So currencies are easy to analyze with the institutional market structure against, say, the dollar index. Currencies are the easiest that you can have a look at to define your institutional market structure, to define your institutional swing points. So every price swing in a currency pair should be studied to determine if market symmetry confirms the direction that you're looking to trade. So how then do we identify institutional market structure in forex trading? How then do we identify it, right? So you need to be in a position to compare every price swing in the dollar index with the foreign currency that you are trading. Now, when I say foreign currency, guys, I'm talking about the majors mainly. You're talking of your USD CAD, USD CHF, UJ, Euro USD, Pound USD, Aussie dollar, New Zealand dollar, and I don't know if I forget another one, but those 7 currencies, those are the ones that I'm referring to as your foreign currency. So what you need to see when you look at those price swings, you need to see, as US dollar trades higher, you expect lower prices or a lower swing in foreign currency pairs. So for instance, if US dollar or a foreign currency fails to move symmetrically, then you've got the telltale signs of smart money actively trading, right? So if US dollar trades lower, you should expect to see a higher price swing in foreign currency pairs. If US dollar or the foreign currency pair that you're looking at fails to move symmetrically, then smart money is actively trading. What do I mean by move symmetrically? So as US dollar goes up, we expect most of the foreign currencies to go down. Vice versa, when US dollar goes down, most foreign currency pairs, they go up. So we're going to look at dollar index in comparison to Euro USD, meaning we're looking at inversely correlated assets, right? So when you look at those price swing, your end result or your goal is to determine your IPDA data ranges, your 3 to 4 month major market shifts. You see, already we're done with the first quarter. We're just beginning. We are now 8 days into the second quarter, of which I think the real trading starts now, because last week there was Easter and markets really did move, but you won't really expect smart money to have been actively in those markets. So when you look at the price swing in foreign currency against, say, the dollar index, you would be looking for smart money accumulation or smart money distribution. At that time, when dollar or the foreign currency fails to move symmetrically, that's when you're looking for what is smart money doing, right? So we've got a good example for this week. We've got a good example of possibly a major market shift. But before we go to the charts, I just want us to look at what's forthcoming in terms of the calendar. Remember, the calendar is your first point of call, right? What I've just been talking about here is just an intro to what I'm going to cover in this market outlook. So we're going to be looking at SMT divergency between dollar index and Euro USD. So you can see Monday was quite a quiet day, not much in terms of major news. Same applies with tomorrow. We're not going to have any major news on the calendar. There is news, but they're not that much of high impact. But if we look at from Wednesday, right, so you can see Wednesday starts with the RBNZ, Reserve Bank of New Zealand rate decision. I'm not sure they're gonna cut. They might keep them at 5.5, and then later on during the day we've got CPI for the dollar. That's a crucial one for this week, and take note of that once we're doing our analysis. Then we also have a couple of other fundamentals on Wednesday, mainly BOC rate decision, that's the Bank of Canada, and then we've got FOMC minutes at 8 p.m. That concludes Wednesday. And then on Thursday we've got Euro, we've got ECB monetary policy, right, heading into New York open. And then we've got the usual suspects, initial jobless claims, but we also have PPI, producer price index. That's crucial for inflation, so we need to take note of that. And there's a couple of FOMC members that are going to be speaking, so expect volatility on dollar pairs, just like I mentioned earlier on. And then Friday we've got GDP for the pound, month to month GDP for the Great Britain, and then Friday also we have CPI for Germany, and then that's pretty much for Friday. So expect Wednesday and Thursday to offer huge opportunities. We're going to see displacement in the markets. So now when we go to our charts, right, so we're going to be looking at dollar index, right. One thing you need to take note of, guys, remember MT5, that's a retail platform. So once in a while, or let's say for your weekend analysis, make sure you look at the trading view pricing on your charts. As you can see right now, if I go to the weekly chart, say on Euro USD, you can see last week did not trade above the previous higher high on dollar index. But if I go to trading view, you can see there last week created a new high, traded above an old high, running buy side liquidity before market moved lower. Same applies if I go to Euro USD, right? If I go to Euro USD, you can see that Euro USD on the weekly chart last week did not trade below the old low that corresponds with the old high on dollar index. Anyway, let me do it this way so that you guys can see properly. I hope investing.com is going to give me a proper pricing. So we're going to go to the major currencies, right? So this is my watch list on investing.com. So I'm going to open Euro USD charts. I need the technical chart for Euro USD. So you see guys, this is something which I already picked up on during the weekend when I was doing my COT report Friday evening. That's when I picked up what I'm discussing here. So I need two charts side by side. So we've got Euro USD on the right, and then I'm gonna put dollar index on the first. So that's our weekly chart. So we've got weekly charts on both assets. We've got our weekly charts. Now the points, the swing points that I'm talking about is, you can see here, if you see my cursor, this swing high on dollar index. Okay, let me see if I can point it out. So we've got this swing high on dollar index and this swing low on Euro USD in comparison to this swing low, and also in comparison to that swing high on dollar index, right? So if I grab my trend line 2 from this swing high on dollar index, you can see it corresponds with the swing low that I first marked on Euro USD. You can clearly see on dollar index we've got a new high, but if I go to Euro USD, you can see Euro USD has got a higher low, right? Euro USD has got a higher low. Okay, let me get rid of these two here. This forms the framework of how we are approaching this week, right? So remember, it can work, but sometimes it's not gonna work. But these are high probability scenarios that we are discussing here. These are high probability setups. So you can see dollar index created a new high at a time when Euro USD failed to create a new low. This is what we refer to as SMT divergency on two inversely correlated assets. So we've got smart money accumulating for buy model on Euro USD, and we've got smart money distributing for sell models on dollar index. That gives you your directional bias for the week. You see, the moment you have that idea sorted out, the moment you have proper analysis aligned to your chart, then you can now start framing your trade ideas. So for instance, when you look at dollar index, we can see that this is happening when price is at a higher time frame. Price is at a higher time frame premium array, right? Price is at a higher time frame premium array, and it's also happening on Euro USD when price is at a higher time frame discount array. So that in itself should give you more emphasis to be hunting for shorting opportunities on dollar and long opportunities on Euro USD. Now, if you are saying you're bearish on dollar index, where is your target? Internal range liquidity of sell stops. You can see that that's the target. You see, that's where you should anticipate dollar index to trade to. And if you look at Euro USD in 10, where is Euro USD heading? Euro USD should trade above last week's high, right? Last week's high, that's your target on Euro USD. So you're anticipating Euro USD to target internal range liquidity of buy stops. You can see on Euro USD we don't have imbalance, we don't have inefficiency, but on dollar we've got inefficiency. Inefficiency on Euro USD was filled last week. This gap here, this gap between this low and that high was filled with last week's candle, right? So with dollar, with us anticipating lower prices on dollar index, right, last week's low becomes your initial target for shorting opportunities, right? You'll be targeting price to trade below last week's low and potentially fill up this whole imbalance here on dollar index. While price is doing that, while IPDA is trading lower to fill up this whole imbalance, Euro USD should be moving to the upside. You see, that's your framework done. That's your weekly framework done. That's how you should be approaching the week. You already know that, okay, so tomorrow there isn't that much fundamentals, but Wednesday, what do we have? We've got CPI, right? Wednesday we've got CPI. So what should be your approach to the market? You should be anticipating price to create, say, a high tomorrow before market tumbles going to the downside on dollar index, or it should create a low on Euro USD before it rallies to the upside. I'm not saying CPI is gonna drop dollar. I'm not saying that. It could be the opposite, or by the time we reach CPI, price would have dropped already. You see, so knowing the fundamentals that are now going to fulfill the displacement, fundamentals that are going to provide you with the displacement on dollar index or on Euro USD. We've got ECB on Thursday. CPI on Wednesday also is going to provide displacement on Euro USD. So on Euro USD we are leaning towards long opportunities. On dollar we are leaning more towards short opportunities. So there's no need for me to be looking at Aussie dollar or New Zealand dollar or pound USD. You already know that, okay, we should be hunting for long opportunities there. Same applies with USD CAD, USD CHF and UJ. You should be looking for shorting opportunities. USD CAD, you've got Bank of Canada on Wednesday after CPI. You've got Bank of Canada. So expecting price to provide displacement, right? So when you now go to, say, so we are on the weekly chart. When you go to the daily chart on dollar index, you see, this is the daily chart and this is Monday's candle. You can see already where price is gonna trade to. Once it trades back into this weekly fair value gap, expect price to find a bit of resistance. And if that happens on Wednesday, then there's nothing wrong in looking for long opportunities, because you've got a daily bullish order block, right? And if we look at Euro USD, right, so this is Euro USD, you can see there this internal range liquidity. That's where we are anticipating price to trade to. If it happens that price is inside this range when we have CPI, right, if price is inside that range, then you have to put into consideration this bearish order block. Though it's not a high probability order block, even also on dollar index, they're not high probability order blocks. So you need to be just cautious when you're approaching those OBs, right? So I'm just gonna go onto my MT5. So when we go to MT5 here, you can clearly see okay, now let me go to trading view. So we're on Euro USD. I need DXY because I've already done this analysis and I've already shared it with you guys on the group. So when we go to the dollar daily time frame, I'm expecting lower prices, right? So if I go to 4 hours, right, on H4 you're looking for market maker sell mode. You can see our price is already dropped since I've done that analysis that I sent to you guys. You're looking for market maker sell model on the H4 time frame. So you're expecting price to trade into premium before it trades lower. You can see today here 1 2 3 price was in premium and then it dropped. Same applies if you go to Euro USD. You're gonna see that price was in discount before it rallied to the upside. Let's just have a look at that quickly. So you can see there, this is Euro USD. So on Euro USD vice versa, I'll be looking for market maker buy models for price to move to the upside. So yeah, that's pretty much what I wanted to share with you guys, to put that notion forward so that you know how you're going to be approaching the markets. And remember, CPI is our instigator this week. CPI is our main catalyst to move the markets, and I'm not really sure how it's gonna come out. It's just a case of waiting. Once the number comes out, then we can react to that. So this week I'm bearish on dollar and I'm bullish on fiber, cable, Aussie and New Zealand dollar. And I'm bearish also on USD CAD. I'm bearish on USD CHF and UJ. UJ has been trapped a bit in that range there. UJ has been trapped. The only problem with UJ is that Bank of Japan, it can intervene anytime, and that's the only downside that I have with UJ. Those intervention can happen anytime, especially when we are asleep. You can see that whole consolidation, and I'm pretty sure CPI is going to bring a huge expansion on USD JPY. So USD CAD, you can see already where we are. We're now in our monthly bearish order block, so I'll be hunting for shorting opportunities to the downside. We have already ran buy side liquidity inside a higher time frame premium array. So you can see all this here, I'm already doing this because I've already done my main analysis on dollar index. So it's just a case of looking at USD CAD and see if it complies to what I'm looking for on dollar index. Then when we go also to USD CHF, so USD CHF, I'll be looking for price to trade lower. You can see price is now in premium. Okay, let me go to the monthly chart. Right, so this is our premium, so I'm expecting higher time frame premium arrays to provide resistance and price pushes lower. I think we could see a weekly high coming in before an expansion to the downside on USD CHF. So aspects of the market, these PD arrays here on H4, they should provide resistance. They should provide resistance and price pushes lower. So yeah, that's pretty much about it, guys. And if you have any questions, just send them on the group, and then we can attend to them. But yeah, I hope you have picked up one or two that you can use in your analysis. So with that, guys, I wish you all the best. I wish you good luck in your trading, and let's get those pips, folks. So yeah, that's pretty much about it, ladies and gentlemen. I wish you nothing but the best and happy trading, folks. Thank you.